Today I'm going to share with you the easiest ICT Judas swing strategy. But I'm not going to share this like how everybody else shares this strategy. Because so many other traders, they teach it in a very complicated way, and a way that often leaves you very, very confused. Today I'm going to teach the ICT Judas swing in a mechanical, simple, easy to follow, rule-based strategy. Everything in this strategy is defined, and everything in this strategy is black and white. And in this video, I'm going to cover absolutely everything that you need to know in order to become a consistently profitable trader. I'm not going to leave anything unturned, and I'm going to share with you absolutely everything. The first thing that you're going to see within the market is a range high followed by a range low. This is your range high. This is your range low. This is your range high, and this is your range low. This is nothing more than a ranging market. And during a London kill zone or a New York kill zone, this line represents the kill zone right here. All that we're simply looking for is a run of sell-side liquidity. Once we see the run of sell-side liquidity, we can then look for a potential long trade on the market. The reason why this works is because this move right here will be manipulating traders, thinking that this is a breakout and enticing them short within the market. Also, any early buyers within this market, their stop losses will be below these swing lows right here. So this move right here will also be stopping out any early buyers. And this is what provides the liquidity for institutions to actually move the markets. This accumulation right here will often take place during the Asian session, but it can also take place during the London session. And so this right here is the ICT Judas swing. This right here is gold on the 15-minute time frame. Just before I break down this trade, let me share with you the analysis that was sent to the exclusive community, just so you can see that I am actually executing this strategy on a daily basis. This right here is my absolute bread and butter. And the first thing that you need to understand is your directional bias. The easiest way to do that is using the 50, the 100, and the 200 exponential moving averages. It's this indicator right here by Dr. Sweets, EMA 50, 100, and 200. When you open up the indicator, you don't need the top one, that is the 20. We just need the 50, 100, and 200. And when the 50 is greater than the 100, which is greater than the 200, this indicates that we are long bias on this market. That means that we are only looking for buys. Okay, so I've just removed the EMAs, but please keep in the back of your mind that we are long bias on this market. Next, we need to identify our sell side liquidity, and we can do that by marking on the London session low. Just so this is very clear for you, we have the Asian session from 7 p.m. until 12 o'clock midnight. This is New York time. We have the London session from 3 a.m. until 5 a.m. And finally, we have the New York session, which is 8 a.m. until 10 a.m. Okay, so all that we're looking for is during a kill zone. So this is the New York kill zone, a sweep of sell side liquidity. In this example, it's below the London session low. And then we can look for a potential long trade in this market. Because what this will be doing right here is trapping traders, thinking that this is a breakout, enticing them short, and also stopping out any early buyers within the market. You can see we run this sell side liquidity right here during the New York kill zone. And all that we're waiting for is simply a bullish confirmation during the New York kill zone. You can see that's what we get right here. Therefore, we can enter a buy position on the break of that candle high with invalidation below the liquidity sweep and simply target a 1 to 2 risk to reward. So this right here is the ICT Judas swing. We're triggered long in this trade right here. And you can see during the New York session, this trade smashes take profit for a 1 to 2 risk to reward. I've personally backtested this strategy on gold, and in 2024 alone, this strategy did over 50 R in return. And I also have the data to support this. You know, and so many traders could have got emotional within this point in the market, looking at buying right here, thinking that prices are going to go higher. And yes, you may be correct with directional bias, but you're probably incorrect with your market timing. So that's why we use the ICT Judas swing to identify and pinpoint a very specific entry within the market. And you know, I've been there before where you probably see this move right here, thinking this is a breakout, and you're looking at shorting this to the downside. And how many times have you shorted a breakout and something like this happens where price then just manipulates and then pushes strongly in the opposing direction? That's why context is so important. Knowing what your daily directional bias is and knowing a mechanical rule-based trading strategy. If you follow the rules that I've literally just covered in this video, I've not held anything back here, and this is literally the strategy that I trade on a daily basis. I want you guys to backtest this strategy and let me know how you get on in the comments below. I guarantee that this strategy will get you funded and consistently profitable over the next 2 to 3 months. However, if you do want results faster, then make sure to check out my exclusive community. The link is in the description down below. Thanks for your time as always, and you take care, guys. Bye-bye.